Yo, 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 Daddy Powell in the chair like a throne of chrome. Finger on the dial, fate's written in the metronome. Every tick a heartbeat, markets in a fever pitch. Printing like a preacher, got believers in the devil's script. Liquidity magician, conjuring inflation apparitions. Balancing equations like a wizard with precision. Rate hikes, cut throats, rate cuts, resurrection. He's the puppeteer that strings the whole correction. Daddy Powell, Papa Pump, central bank overlord. Pulling levers, flooding rivers, watch a dollar turn to swords. Capital carnivore, crunching debt like brittle bones. Making hedge funds kiss the ring, bending knees to microphone. Jerome the Colossus, colossal imposture. Spinning Fibonacci spirals in the charts like a proctor. Supply chains twisted, demand gets distorted. He speaks and the ticker tapes instantly contorted. Save us, Daddy Powell, inflate the vein, revive the corpse, resuscitate the indices, Nasdaq riding wild horse. Pump the S&P until it pierces out of orbit. Give us green candles like the sky was chlorophyll lit. Yo. Crypto praying for reprisal. Tech stock revival, Tesla in a tribal cycle. GameStop disciples screaming Papa bless the tape. While banks hedge bets waiting for the great escape. Federal Pharaoh, Wall Street scarecrow. Farmers of fiat reap debt where they dare go. Quantitative beast mode, QE fever dream. Daddy Powell conducting whole symphonies of green. Yo, he the maestro, orchestrating chaos in the chamber. Every basis point a dagger, every cut another savior. Gold bugs panic, silver surfers riding tides. Meanwhile, liquidities ascend like phoenixes that never die. Jerome got the cure, like morphine in the bloodstream. Shocking every sector till they sparkle with the blood gleam. Resurrect the wealth effect, make the sheep rejoice. He ain't human, he the algorithm's voice. Yeah. So Daddy Powell, bless the charts with divine design. Carve your legacy in candles, all-time highs align. We the faithful on the floor, chanting every sound bite spoken. Waiting for your gospel, markets rise, chains broken.
Oh, brother. Good morning, and welcome back to another episode of the Matt Kohrs Show, where it's all about to go down. It ain't a normal Wednesday, September the 17th. It is an FOMC day, a Federal Open Market Committee meeting. We are going to be finding out what the Fed has in store for all of us today. As of this moment, the odds are sky high for a 25 bips rate cut, but that's just kind of the headline stuff. Of course, you're going to get conversation. It's also one of those meetings where we get the SEP, the SEP, the Summary of Economic Projections, those little dot plot things where we get to see where all the voting members, where their ideas are going to be at for basically not only the immediate future, but also a little bit of time out into the future, a couple of years. So it's going to be a big day. Big day. This ain't a normal hump day. This is very much going to be jam-packed with a lot of chaos, a lot of volatility, a lot of whipsaw. I hope you are ready. My goal this stream is to, first of all, apologize. I missed the show yesterday. Sometimes when you're a cool person, you get invited to go do cool people things. And that's what happened to me randomly Monday night into Tuesday morning, where I got a last second invite to go have a dinner with the bigwigs who were basically, it's related to the Trump family. ABTC is the ticker. It's a new mining company that is spinning out of Hut 8. Anyway, it's a new company and I was invited to the dinner. Met a lot of cool people. Learned a lot about the industry. Very cool. And then I went to the bell ringing ceremony yesterday morning at the NASDAQ. So like I said, when you're a cool person, you get to do cool people things. Matt, get a trophy. I actually did. That's from the ABTC dinner back there by Ned. Ned's now hanging out. You can see it behind my head, this little bowl trophy. Yeah, that's from the dinner. So really, really cool. It's always interesting to kind of meet the professionals in this world. I know in our domain here, it's a lot of like influencing, content creation, and whatever. And then I forget that we're in an industry that's actually absurdly also professional. So it's like, it's not even the other side of the coin. It's just, I guess, kind of in the same world, but it's many blocks away, and it's just interesting. I guess like sometimes I always feel like we're here just screwing off, having a good time, and then I do kind of sometimes not appreciate like there's actual money, actual professionals doing actual things. So that's where that was at. And I should probably at this point let you know that there's a good chance I miss Friday's show, depending on if I get invited to another event. There's a big Tasty Trade event, which I always have a soft spot in my heart for them because years ago, that is the main entity from which I learned options trading. So I always have an immense amount of respect for Tasty Trade. Like I said, I remember back in college, like going through all their videos, their breakdowns, their analysis, and word on the street is they have an event here this Friday, OPEX Friday. So maybe not. I don't know. I'll let you know. But anyway, I am back in time for the big day of the week, and this is going to be basically setting up kind of the structure and the framework for the remainder of the year, because not only today are we expecting a 25 bips rate cut, but really through the SEP and Jerome Powell's commentary, the chairman of the Fed, we should be getting a better grasp of what's going to be happening from now for the remainder of the year. Because after this, there's two more FOMC meetings, as in two more opportunities for rate cuts. Are they both going to be 25 bips? Is one going to be 50 bips? Is one going to be no change at all? So it's this idea of where are we going to be between now and the end of the year? Are we only going to be 50 pips lighter in terms of the Fed rate cut? Are we going to be 75 bips, which is the highest odds right now? Or are we going to reach for it and go 100 bips? So we're going to find out. Obviously, this is happening at a very interesting time because the market literally hitting an all-time high yesterday. And then shout out to all of those of you who watched the update video yesterday. JP Morgan did a very interesting, nerdy stats, facts, and figures breakdown of what happens when the Fed cuts rates and we're within 1% of the all-time high. The answer is within a year, we generally rally 15%. So if you're looking at SPX right now at 6,600, if this comes to fruition, if history repeats, and in the market it doesn't really repeat, but it often rhymes. So even if we're humming the same tune, doing a similar dance, that would be putting us at 7,600, 1,000 points higher between now and September of 2026. So I'm going to be breaking that down. Like I said, I explained it better in the update video yesterday. So we'll talk a little bit about that. And really, that's going to be the name of the game today. We will be talking about the Fed. We're prepping up. We're going to watch the morning open. I'm going to remind all of you kindly, don't forget to roll your contracts. Generally, if you're trading futures, especially for those of you paying attention to whatever Apex, Take Profit Trader, if you're trading futures, there's a good chance you might still be on the September contract. Feel free to raise your hand if you're guilty of that in chat right now. Don't forget, you're probably going to want to go over to the December contract because it is starting to get more trades as higher open interest now than the September one. So this is probably a good opportunity for you to roll. So I just want to call that out. Please pay attention to whatever contract you are, especially when it comes to the world of futures trading. So I'll remind you of that a little bit later on today. But for all you early birds before the market gets open, you might want to be updating from September to December, especially if you're trading ES or NQ or something in that particular world. Because don't forget, this OPEX is not just a normal monthly OPEX, it's actually a triple/quadruple witching. So it's the end of the quarter as in big pivots, and a little bit later on when we get closer to the end of the month, especially if the S&P 500 is close to 6,500, we're going to be talking a lot about the gamma influence from the JP Morgan collar position. So that's another thing I want to put on your radar. But really more specific to today, my goal is to get you guys ready for what to expect today, to get into some of those nerdy ass stats, facts, and figures, to be a little bit more mathematically prepared. And then, of course, a reminder that I will be streaming once again. So today, we would have done this regardless. I was going to make the joke because I missed yesterday. You're going to get a double feature. But in all reality, that's not the truth. You're going to get a double feature today no matter what. So we will have the quote unquote normal show from 9 to 11. And then we're going to be streaming once again this afternoon for the Fed interest rate decision right before 2 p.m. We'll start again. And then Jerome Powell speaking at 2:30. So if you are here right now and you're like, when's the interest rate decision come out? When is Jerome Powell speaking? It is later this afternoon. And we will be doing a special secondary one for that, just so everyone knows. Just want to throw that out there. So prepping everyone up today or for the morning, market open, all that good stuff. We do also have some secondary stories related to Oracle and related to TikTok. And if you guys saw it right now, Trump is visiting the UK. They had this giant processional, and it was very ornate. I mean, I think at one point I saw like a gold covered like horse carriage bringing Trump to the palace to meet the king. And so that's all going down. And then just now before I started this, there's some breaking news related to NVIDIA in China, and NVIDIA is quote unquote upset, or maybe, I don't know, they're not happy that apparently their chips are getting banned from China. Obviously, it seems like it's somewhat of a trade negotiation, tariff war, that type of a thing. It seems like it's a negotiation chip, if you ask me. So a little bit about that. So overall market, individual stocks, market open, degeneracy, craziness, pause. We all get lunch. I recommend getting some, I don't know, it sounds like ramen feels good today. I would recommend getting a little bit of ramen for lunch, and then we're going to come back after lunch, and we're going to get into the world of the chaos, absolute insanity of how the market's going to react in the short term as it relates to the Fed decision. So that is the plan for today. Now, before we get rocking with that, first of all, shout out to Apex. They are one of the partner of today's stream, 80% off with that code Goonie. You have 6 days left. The reason I'm bringing it up today is this is a perfect opportunity to pass these evals. Not only are they cheap, they are 80% off, but the volatility you're going to get this afternoon, you could easily do the buy one, sell one, like buy two accounts, go long one, go short one. One of them should pass, the other one will blow out. This is a perfect day to do that. So if you're sitting there and you're like, hey man, I don't really want to be financially efficient. I want to be time efficient. I want to pass these tests right away and go over to performance, because remember, right now the current offer is a 1 day to pass performance. So at 2 p.m., you could get this all ready. You have time to do it. I don't want to rush anyone or anything like that. You're not rushing to do this by 9:30, but I do want to let you know, if you get your accounts now, 2 p.m. will be a most likely a high odds chance of at least passing half those accounts. And if you don't know what I'm talking about, there is a standalone video explaining this process, but basically you buy two accounts right before the event, like seconds before it. You go long max contracts with an ATM set up, so your profit's already like going to be established as soon as the order is entered. You do that long, you do it short on another one. One of them should pass, one of them should blow out. Is it a guaranteed methodology? No, but the hit rate is very, very high, especially when you have like just the extreme volatility and market reaction and chaos that you're going to see at 2 p.m. today. So I want to call this out. This is a great opportunity for you to very quickly pass the test. And then obviously also shout out to Spot Gamma. We are the only community on God's green earth that Spot Gamma gives 80% off to. So if you want to check it out, 80% off. Whenever I'm doing these breakdowns and looking at Hero and looking at the flow and even looking at where we're in high gamma, low gamma, where we could fall down the mountaintop, basically everything I use to make that $80,000 trade off of Tesla, well, you could get that right now for 80% off to see if it is appropriate for you. So shout out to Apex, shout out to Spot Gamma. And with that being said, let's dive into it. Stock futures are little changed as traders await key Fed rate outlook. That's not a surprise. Everyone's kind of in the wait and see mode right here. The SPY we sold off in the morning. So did the Qs. So did the Russell. Not the best market open reaction to the retail sales report. And then other than that, we kind of found a little bit of stability, a bit of a pop, a bit of a drop, and now we're basically at the closing value. So right now, both the SPY and the Qs, and really even the Russell's a little bit better, but the SPY and the Qs effectively pinned to their closing value, and I would not be so surprised whatsoever if that's how it really remains. I like to refer to it as violently going nowhere all the way up until 2 p.m. today. So because of that, If you're a day trader, scalp trader, swing trader, whatever you are, remember, days like this are completely fine to skip. In fact, based on all the journals I could find, and this isn't all the times I've traded FOMC days, but based on all my journals that I could find, I'm a net losing trader on FOMC days. So for me, and this is personal preference, I'm not your mom, I'm not in control of your money, but this is going to be like a high octane thing. So if it's a high octane reaction and you're also playing it in a leveraged manner, yeah, it's great if you're on the right side of it, but if you're on the wrong side of it, well, that's how you could easily blow out accounts. And remember, to survive the marathon that is trading, you need to at least be in the game. So I just want to put that out there that, remember, this isn't a very acceptable day to skip. And that's generally what I do. What my personal plan is really to not touch any of my swing positions whatsoever, see how the dust settles today and especially tomorrow. And what I'm going to do, just because sometimes the amount of trading days you have in those sim to funded futures accounts matters, I'll probably do a couple scalp trades this morning just to lock in the quote unquote trading day. And other than that, not really carry anything special. So just want to call that out there. Remember, it is more than acceptable to not trade on days like this, especially if your trade time is pretty much the full duration of a day, because who knows what's going to be happening this afternoon, and it's all because of the Fed. Fed divisions thrust Powell into uncharted territory. Analysts are watching whether Trump-appointed Fed governors will back a larger rate cut or instead negotiate for stronger interest rate clues. So let me give you a little bit of the drama here. The last time we got Fed rate cuts was the end of 2024. And in fact, it was actually the final 3 FOMC meetings. So I believe it was September, October, December. We got, a 50 bips, a 25, and a 25. Maybe not in that order, but at one point in time, the Fed rate was at 5.25%. We got a full 100 bips off of that, which is why we're currently at 4.25, and we've been sitting there pretty much this entire year. Now, up until the last FOMC meeting, all of the votes were unanimous. There was not a dissenting vote. There are 12 voting members, and up until the last one, there was nothing. Looking at the last one, there was Kugler, Adriana, I believe was her name. She stepped down, and we have a new Fed member coming in. So she didn't vote. She abstained. And then there were 2 dissenting votes, but they were kind of how I would describe it, as like a weak dissenting vote. They're like, yeah, we know we're not going to do it, but we think the data that we're starting to see, the economic pressures are starting to suggest maybe a 25 bips rate cut. And remember, the backdrop of this is that Trump wants a 300 bips rate cut. Now, he said it. Does he really want it? I don't know. You'd have to be in the mind of the president, but he has on record said, I want it to be 300 points lower. Remember, we're at 4.25. He basically wants it down at 1%. So with that in mind, and it's important in this context because Kugler stepped down, which means Mirren is now in, and he was just appointed yesterday, as in he is in there. He was approved by the Senate just in time to be able to vote in this one. So this is going to add a little bit of drama because most of the time, these FOMC votes, most of the time, they are unanimous. We had a little bit of dissenting voices last time. This time, they expect serious dissent, serious discussions, and that's most likely what's going to come out in the SEP, the Summary of Economic Projections. You get that every other FOMC meeting, and also in Powell's testimony, or not really testimony, but his prepared speech and his answering of all those questions, but from the analysts at 2:30 today. So this is one where, and I get it, I'm probably part of this problem, but it always feels like every single FOMC meeting is the most important FOMC meeting ever. And unfortunately, it feels like this one is extremely important. And I'm sure we've said that about everyone. But at least what I could say this time around is, yes, it is incredibly important, but we're going to have a little bit more of drama, a little bit more political theater, if you will, this time around more than normal. So it's been a while since we've got a rate cut. We're probably going to get a rate cut again today, but the market is going to be heavily leaning on the either dovish and or hawkish tones of Jerome Powell and really this new composition of the voting body. What are they doing? Is there truly political pressure? Is there no political pressure? So we're going to be in for not only an interesting day, but I would argue for the remainder of the week, just because you're going to see how the dust settles. You have OPEX on Friday. Please don't forget, at 9:30 this morning, in a mere 12 minutes, volatility contracts expire. So today's not just an FOMC day. Remember, we're in that territory of quadruple witching, which means that the vol contracts expire today. The way there's a natural end to futures contracts, options contracts. Well, all the volatility, like the VIX-based contracts, they expire at 9:30 this morning. So there's going to be rolls and movement there. We are in for quite the day, folks. Fed rate cut to mark pivot toward the job market. So we know from the Jackson Hole meeting that Jerome Powell, the chairman of the Fed, basically said, hey, we think in the longer term, we're going to be fine with 2% inflation. And we're fine with it being at 3 right now. And we're starting to get a little bit of data that suggests the job market is weakening. So we think that the risks might not be as extreme on the inflation side. So we're going to help out the job market a little bit. And basically, as soon as he said that, the options, well, not really the options, a little bit of the options market, but more of the bond/yield market, they said, cool, bet. And right now, the odds of a 25 bips rate cut shot up to 90% according to Polymarket, and there's an 8.6% chance of a 50 bips rate cut. According to Call Sheet, the numbers are pretty much the same, a little bit better for a 50 bips rate cut. According to Call Sheet, there's an 11% chance of that and a 89% chance of a 25 bips rate cut. This right here, and once again, just conjecture on my part, is most likely due to, some of the recent job numbers have been a little bit messed up. Inflation isn't the best, but retail sales are still actually kind of going up. If anything, just guessing here, it's probably because of the new composition of all the voting members. The fact that Mirren is now in there, a Trump appointee, there's clearly going to be a little bit extra pressure. And I think you're seeing that right there at that 11%. So as of now, I'm not telling you which way to bet, which way not to bet, but I am telling you that the market is telling us with high odds, 90% chance of a 25 bips rate cut. And I think what's really going to be moving the market up or down, and really what defines it for the remainder of the year, is the either hawkish or dovish tonality of the Fed, specifically the chairman in the speech and all the questions and his answers today. If he comes off dovish, it means you know what? I could see maybe another 25, maybe even a 50 between now and the end of the year. And we all of a sudden get down to 3.25. I think the market's going to be like, dude, that's dovish. We're ripping it. But if he goes the other side and he's like, you know what? We gave you guys 25 bips today. We're helping out the job market. But from here on out, you might not get any. We're going to see how things are going. And if it sounds a little bit more hawkish, well, I could see a world in which the market doesn't like that he is sounding hawkish. And then all of a sudden, the proverbial bottom falls out, but it won't be really that extreme because remember, we just hit an all-time high. Fed set to cut rate. What is this? Lyft stock soars 20% on Waymo Nashville robo-taxi deal. Interesting. Fed set to cut rates, but forecast for the rest of 2025 is key to markets with politics clouding the picture. The Fed meets with some big items on the agenda, an important rate decision and forecast of what's ahead, combined with a healthy dose of political intrigue, uncommon for central bank policymakers. While the rate decision is pretty much in the bag, what happens from there is anybody's guess. Markets are betting heavily that the Fed will stick to the quarter point or 25 basis point reduction from the current of 4.25. So basically going from 4.25 down to 4%. We know those are the high odds scenarios. According to the Fed Watch Tool, there's a 94% chance of that happening. What's interesting is in the October meeting, okay, right now, the market is saying we're going to get another 25 bips rate cut after this one. Okay, interesting. 75% chance about that. December one. Well, the December right now is saying it's most likely we'll get another 25 bits. This is how the market is currently betting. But remember, based on the speech, based on the summary of economic projections all coming out at, 2 and 2:30 today, these odds are going to change. And I'm fascinated. I'm very, very excited to see how this really all starts to shape up. So once again, That comes out at 2 p.m. today, the FOMC statement and economic projections, and then the press conference is at 2:30. So there's a 30-minute delay, which I actually find that little 30 minutes to be absolute purgatory if you're day trading and scalp trading. I do want to remind you, it's not on this list, but at 9:30 this morning, in a mere 7 minutes, you're going to have vol expiration. VIX contracts do expire, so don't be surprised if we have a little bit more of a chaotic opening than you were maybe initially anticipating. Tomorrow is a normal Thursday, initial jobless claims, some manufacturing numbers, and then Friday is OPEX, but it is a quadruple witching. So I want to call that out. Now, with all this is the key point of the update video yesterday. If you watched it, thank you. I appreciate it. The video did very, very well. You guys seem to be very interested in it. For those of you who missed it, first of all, demerit. You're supposed to watch every single video I ever put out. So if you didn't do that, that's on you. But here's the key part, because I'm a nice guy and I don't want you to miss out on this. According to research done by JP Morgan, when the Fed cuts rates with the S&P 500 within 1%, which is what we are, of an all-time high, it results in an average return of 15% over the next 12 months. Furthermore, according to the research from this particular source, which is phenomenal, a 1 month performance is more spotty, with stocks ending lower 50% of the time. History says near-term volatility after today's rate cut will be long-term buying opportunity. So if history repeats a year from now, we're going from 6,600 all the way up to 7,600. But in the short term, for my day traders, scalp traders, swing traders, it truly is flipping a coin. And this research actually mirrors everything that I was able to find of, if you're asking for today, the week, and the month, it really is about a 50-50 opportunity whether the bulls or bears win. The data is not convincing in either camp in the short term, but in the longer term, according to this, at least, the longer term, it does look like the bulls dominate. So how would you interpret this? Well, I would say in the short term and the long term, just hope that you're lucky. Pray that you are a lucky person if you engage in trading. You could also keep in mind, especially when it comes to your higher quality blue chip stocks or even the overall market, if in the next week or month or something like that, you see a legitimate dip, well, odds are saying that that dip is worthwhile to be bought. This isn't a guarantee. Obviously, this is just if history once again plays out, but I just wanted to share that with all of you to add a little bit more of framework to today's shows and commentary and all the crazy price action. I also want to chit chat a little bit about individual equities. Alibaba shares jump after it lands a major customer for its AI chip. So Alibaba for a bit there was ripping, then it took a huge hit, and like this played out over the years. Now it's finally showing some life and obviously leaning a little bit more into the world of AI. NVIDIA CEO says he's quote unquote disappointed after a report China has banned its AI chips. So the CEO commented after a report that China has banned the use of the company's AI chips. As I said at the start of this show, it seems as if this is just a bargaining chip in the overall trade war. NVIDIA as an individual private company is now caught up in global politics, not only for trade, but also for security. So I would assume this isn't something that's going to stick here. I think it's going to stick and it's going to be part of the discussion as long as the US and China are currently figuring out their trade agreement. So just wanted to throw that out there. Also somewhat related, TikTok buyers to include Oracle, Silver Lake, and Horowitz. So right here, Oracle and Silver Lake, part of TikTok investor group as Trump extends the deal deadline. President Donald Trump yesterday, Tuesday, extended the deadline for ByteDance, a Chinese company, to divest TikTok's U.S. business, which has been owned by an investor consortium that includes Oracle and Silver Lake. The Wall Street Journal reported that under the framework deal, about 80% of TikTok's U.S. business will be owned by those investors as well as Horowitz, which just another big player. It's the fourth time Trump has extended the deadline, keeping TikTok from having to effectively shut down in the U.S. He doesn't want to shut it down. He's gone on record multiple times saying how much he likes it, and he thinks TikTok is a big reason why Gen Z turned up for him to vote for him, at least the ones that did. So he doesn't want to get rid of it, but this is another aspect of the trade deal. Once again, the larger trade deal between the US and China. So TikTok is a bargaining chip, NVIDIA is a bargaining chip, and there's probably many, many more. So just wanted you guys to all know about that. Very quickly, if you haven't already, sign up for the newsletter. It's 100% free. My mod will drop it in the chat. It is in the description of the video. Like I said, 100% free. Every single Sunday morning to your email inbox, if I get up in time, you're going to get a breakdown of what's going on in the market, a cheat sheet for all the earnings, A little cheat sheet for all the major macroeconomic events right here. Fed Chair Powell's speech, Fed interest rate decision, and then also the seasonality for each individual trading day. I do want to let you know that historically this day is slightly bearish. This is a look at the hypothetical equity curve you would have if you bought it open, sold at close on the S&P 500 futures market. It does slightly favor the bears. Now, is this the end all be all? No, it's seasonality. Sometimes it's right, sometimes it's not. I just wanted to give you an idea of the context for the headwinds and tailwinds going into today. Tomorrow is also leaning bearish, and then Friday is actually bearish. So I just want to let you know that today, tomorrow, and the next day, from a seasonality standpoint, it does favor the bears, but obviously all eyes are going to be on the market's reaction to the Fed today. Speaking of that, for my day traders, for my scalp traders, these are all the key levels I'll be looking at. As I always do, I mark out the previous high, low, and close. That is the green, the red, and the white line. The white box is the transition zone based on the 0DT, gamma, and delta influence. Choppy within, bullish above, bearish below. And then the final thing are these yellow horizontal lines, which are all the major open interest levels, as in where we see quite a few of the players like actively putting their money on the line today. So we do have a very interesting gamma setup. Basically, we have a lot of positive gamma from 6,400 all the way to 6,650. Obviously, negative gamma to the top side, negative gamma to the bottom side. We are much closer over here on the right side. So if we start to push 6,650, that really does open up a shot at 6,700 today. Is that a guarantee? No, but that is obviously the structure I'm watching. Quite a bit of support at 6,600, 6,580, and then also 6,500. So those are some key levels on the SPX. Obviously, breaking out of 6,640, 6,650 kind of sets up that push maybe to 6,700. That's just if you're playing. Once again, I would not be doing my job if I didn't remind you guys, days like today are completely acceptable to sit out. On that particular note, ding, 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 ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, the SPY opened just above its closing value from yesterday. The Qs opened just below its closing value from yesterday. Bitcoin currently sitting at 116,000, and you have the Russell also at 239, which has been a key level for it for quite a while. Palantir's taking a little bit of a hit this morning. Avago as well. Tesla giving a bit back from its recovery yesterday. Apple had a great day yesterday, and it actually looks to be recovering. You have Meta even potentially trying to get that 780 breakout. Microsoft having a tough time at that 512 breakout. Nvidia down 1% due to that news from what we heard this morning about US and China and Nvidia. Robinhood's up ever so slightly. CoreWeave almost broke out yesterday, got smacked. Hut's down a little bit. AMD. Is there any big movers? Netflix trying to recover after, what was it, their chief product officer or content officer? Someone stepped down from Netflix a couple days ago and seems to be recovering a little bit off of that. But we're opening up. We're pretty much pinned to all the major closing levels. Obviously, you guys said Lyft was moving quite a bit. Well, it's already selling back. So, I mean, Lyft went from 20 up to 27, down to 22.50. When you see giant reactions like this, remember, you're the sucker if you're the person who's chasing. If you're in before it, awesome, ride the trend. But if you're trying to get into it afterwards, you are the exit liquidity for someone who was in beforehand. So not a quality decision in my book, but hey, once again, I'm not your mom. Do what you would like. I want to see how the Russell really behaves today. The Russell, I forgot to give you. I know we went over the S&P 500 SPX, but let me give you some of these key levels on SPY. So SPY, the key level that we're watching is 660. We're at it right now. The big support that's below us is at 655. The big target above is 663. If you happen to be bullish, a reach target above that would be 667. Once again, these are all the key gamma levels. Looking at the Qs, we have support at 590, about $1.25 below where we are. A reach target above this would be 595, and we have big support below at 585. So once again, those are for the Qs. For the Russell, we have support at 239, which is where we're at right now. There's a bit of a battle at 242, but 245 is a bit more interesting. And if 239 doesn't hold, there's big support at 235. So whether you're bullish or bearish with respect to SPY, QQQ, IWM, those would be my, based on the option options market my upside and my downside levels of interest. I don't want to tell you to be bullish or bearish, but that's exactly what I'll be looking at. We already kind of looked at SPX. Obviously, we know 6,600 is massively important. Not only are we at the closing value, we're within the transition zone, and I'm not really expecting a whole heck of a lot to happen all the way up until 2 p.m. So that's another thing to remember. If you're selling premium today, vol levels are going to stay elevated, and they're not going to dump until later this afternoon. So not even necessarily my favorite day to sell premium. As a person who loves selling 0DT premium, it's one of my favorite ways to engage with the market. There are certain days like today where the vol is just going to remain so high that you're not going to see that much of delta decay. Yes, of course, you're going to have theta decay just because that's how time works, but you're really not going to see the vol dump until 2:30. So just another thing to consider if you are selling premium. Obviously, not only this afternoon, but early today, we're going to be checking out how the flow is going. SPY is almost perfectly flat, and the MAG 7 is actually selling off. Is it profit taking? Yeah, you have some calls getting sold as the puts are completely flat thus far on the MAG 7. So remind me to come back to this. Let's just give it a little bit of time to open. Granted, we're only 4 minutes into the day. Obviously, here's the gamma map on the day. Remember, positive gamma and negative gamma, not bullish or bearish. Positive gamma means mean reversion. If you go up, market makers sell. If you drop, market makers buy. That is positive gamma, mean reverting. Negative gamma, which is more of this like red territory on the top and the bottom, that is more of trend following price action. When it goes up, market makers buy, pushing it higher. When it goes down, market makers sell, pushing it lower. So positive and negative gamma, not bullish or bearish. It could either be either, but really positive gamma, you should think of that as mean reverting, as in you come back from your extremes. And the negative gamma is no, whatever way you're trending, you really get trending. So right now, far away, we do have some negative gamma, but overall, I showed you that structure. There's quite a bit of positive gamma between 6,400 and 6,650. So we're technically in positive gamma right now. 6,400 is very far away. So the interesting break would be above 6,650, setting up a test of 6,700, kind of getting into this pocket of negative gamma right there. So once again, something to consider. If you're just joining in right now, don't forget today, FOMC day. Fed rate decision comes out at 2 p.m. Jerome Powell speaking at 2:30. This is an excellent opportunity to do that degenerate long one, short one strategy to pass an Apex account. Don't forget to use that code Goonie, 80% off the evals. So not only are the evals relatively cheap right now, but 2 p.m. results, that's going to be enough of a volatility that with high odds, you're probably going to at least pass half of them. So if you go long 3 and short 3, probably 3 of those are going to pass. 3 of them will go bust. 3 of them are going to pass. If you don't know what I'm talking about, I do have a breakdown video that better explains this strategy, but I do highly recommend setting up an ATM strategy beforehand. So as soon as the trade is entered, which you should do a couple seconds beforehand, like I'm talking 159 and like 55 seconds, 56 seconds, something like that. Set up the ATM so that profit is already put into exactly where you need it to be. All right, what are we doing? IWM's looking good. AVGO, getting a fucking breakdown. I do not like that. AVGO breaking that shelf, not a fan. I'd much prefer that it goes above 65. There's some support at 55. There was support at 60. Obviously, that is currently not holding. Edit, crossing down. All right, let's save that alert. Palantir doing its thing still. Once again, 170 is a big battle. Add alert, crossing up. IVGO, Tesla, kind of that flag formation. I'm still waiting for the downside gap fill on that. Apple is looking good. Higher highs, higher lows. Looks like it wants to break out that 241, but paying attention to this overall nice structure. It's really gotten going ever since the start of August. Meta, similar situation. We've been talking about that upside gap fill. It actually got that 2 days ago, or actually yesterday. Once again, tagging it this morning, but easy play. I didn't play it. I didn't really like the risk reward of it, but the odds were high. So congrats to everyone who played that upside gap fill on Meta. Microsoft, fake out breakout here at 512. That's another one that has similar setup to Meta where I'm like, I don't really like the risk reward. I'm not seeing that much of aggressive bets coming in the world of options. And right here, fake out breakout got smacked. And that's exactly why I didn't play it, because I didn't want to be the person holding these calls and just for it to get dumped on me. NVIDIA getting a breakdown. There is an upside gap fill to 174.38. Let me crossing up. But right now, NVIDIA is down on the news of just basically caught in the, I don't know, crossfire, political crossfire. It's a little bit of, edit, crossing. Why is this not enabling? I don't know. This CoreWeave, I put it back on my radar just because not only were we above the EMAs, but we had higher highs, we had higher lows. I was looking at this trend line breakout. We tapped it yesterday, thus far getting rejected, but I still obviously think it's worth a place, at least on my watch list. Robinhood putting in a higher low, actually showing a decent amount of strength, might be gearing up for another touch of 123-ish. It's all-time high, but overall higher highs, higher lows. We had a bit of a pullback here. There was interest of this downside gap fill, but look at the structure right now. It does seem as if the bulls are in control. AMD going flat, almost got its breakout, but thus far nothing to run home to mom about. HUT 8 looking great, not an all-time high, but the overall trend over the past 6 months has been phenomenal. Coin doing nothing, MicroStrategy doing nothing, Netflix maybe bouncing off this fake out breakdown right here. We do have lower lows, but we have higher highs. Kind of an expanding pattern, kind of looks like a microphone. I hate this setup. I just don't like trading it. Rum is flat, DJT is flat, Ripple's chilling at $3, Solana's at $2.34, Texas Roadhouse, this has to be naked shorting in dark pools. That should be illegal. If you've ever had one of their bloomin' onions, you would know you would never bet against that. That seems like crazy to me. Bonds are higher, yields are dropping. It's all in anticipation of the rate cuts. Oil 65, gold hit an all-time high yesterday, might be gearing up to hit another one today. Vol is continually getting crushed. IWM is starting to pick up. But okay, so we're seeing a bit of a rotation, like literally in real time. This is kind of a cool, real time lesson. NASDAQ is getting beat up as you're seeing a rotation from tech into small cap. Fascinating. Like literally you are in real time watching this rotation. Very, very cool to have a real time example of it. So you have Avago getting beat up. You have Tesla getting beat up. Apple's actually holding. Meta's getting beat up. Microsoft's getting beat up. Those classic large tech plays are getting smoked as you're seeing the Russell really pop. So a bit of a rotation seemingly from the high-flying AI blue chip tech stocks into the small cap sector. If you happen to be playing the Russell, you're looking for the hold of 239, the break of 242, followed by 245. That's what I'd be looking at. The SPY, it's going to be in between these two because, yes, the SPY does have exposure to the high-flying tech names and has quite a bit of influence. But remember, there's a lot of other things within the SPY, such as financials, healthcare. You could go through all the industries. Look at XLE from here. We could just do it right now. So you have XLE. This is the energy sector. You have XLF. That's the financial sector. XLU is utilities. XLI is industrials. XLV is healthcare. XLRE is real estate. XLY is consumer discretionary. XLP is consumer staples. XLK is tech. So it's actually the tech sector that's the weakest, and pretty much all these other sectors are looking really discretionary. Could use some healthcare. What's jumping out to me is financials. XLF is looking good. So JP Morgan actually not really doing much today. Wells Fargo having somewhat of a decent open. Citibank, Goldman Sachs, BlackRock. Yeah, there's not too. As a whole, the sector's looking fine. What about small banks? KRE not doing much. So as a sector, it's looking good. How's SoFi doing? SoFi is not doing as good as I thought it would. Interesting. As a sector, it's doing fine. I can't really off the top of my head find the one that's like crushing it though. Maybe FinViz could help out a little bit here. No, it hasn't updated yet. I think we have to wait 15 minutes or something. But something down here in the bottom left of XLF, this is the financial sector down here. Something's doing well. Maybe it's the credit. Is it Visa? It might be the credit processing, like credit cards, credit processing. Could be. So as of right now, well, I was going to say the Russell was the bell of the ball. SPY is starting to lose a little bit of its way. The Q's actually cracked the low from yesterday. Not the best setup if you're bullish right now, but I do want to remind you that really anything can happen today. So a little bit of a toppy formation. We rip. This is the first time in a minute that we've cracked the recent low. That actually hasn't happened all the way back to the 9th. And even then we had a strong recovery. And that was the one example all the way back to the 2nd. We're starting to show a little bit of weakness, but who knows? I'll tell you better at 2 p.m. today of if this is holding or not. So a little bit of a toppy formation right now on tech. Not quite there on the SPY. The SPY is kind of indifferent. Still an inside day. We haven't broken the high or the low of the previous day. So a little indifferent still there. While the Russell, the small cap sector, is actually trying to show bullishness. We're getting that V-shaped pattern. I would love the breakout of 240, of 241, 242. So watching that. Bitcoin had a great night last night, but seemingly, as I've been saying a lot lately, it just is not holding these gains. We almost got that breakout of 117.5K and quickly led to some selling this morning. So unfortunate, but yeah, we had a nice pump going there, and it's just it's getting up there. It's just so lethargic. It's just so lethargic. So excited to see how that one ends up playing out today. Excited to see how that one reacts, but you really have to squint and look pretty hard to find anything green on the watch list thus far today. You really do. Wow, things are just getting really hit this morning. NVIDIA is kind of getting smoked. So Tesla's getting a little bit of a bounce. Here's a look. Oh, the flow. Mag 7. Oh, people are buying puts and selling calls. It took a little bit of a breather here at 940, but getting hit pretty decently. The SPY, also a little bit of a downtrend. I wouldn't call this getting slaughtered, but definitely a little bit more of a downtrend than anything else. Let me switch on my camera so you can see this. I haven't done anything today. I did one little scalp trade on my take profit accounts because you have to trade for 5 days, and I've already traded. I already hit the profit target, 3K, 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 3K. So I just had to put in a scalp trade this morning, and I did that on all of those. So those should be good to go for tomorrow to go from eval to performance. So those are those 50K take profit accounts. Once again, eval stage, I just had to trade one more day. I did a scalp trade early this morning when I got up. So technically, I did trade today. That's all I did. But in terms of the accounts that I'm currently running the strategy on, that hasn't fired yet. And remember, it can't fire until after 10 a.m. So those haven't done squat today. I did take a little bit of a hit yesterday. And unfortunately, I don't even know what happened because all of it fired when I was not there. Obviously, the bot was handling it for me. And I came home and I realized that it had a 2-unit loss. And at a 2-unit loss, it turned itself off, especially because I wasn't there. That was something like a little bit more conservative of me to code in was, I was just, no way. Sorry, you guys distracted me. Oh, that would have been an interesting play. Shorting this 10-minute breakdown, targeting the overnight low. I wonder, is that still a worthwhile play? Is this a work? Because you could get it, you could take advantage of that right now. 78 down to 50. That's 20 points. Like I was just thinking about this target level. Oh, I was just thinking about it. Do I want to get my scalp trade out of the way now? Do I just want to do it? What's the flow looking like? Tough decisions. 78. A little bit of a bid. And it's catching a bit of a bid about 15 minutes in. Mag 7, it did get hit, kind of showing some signs of bottoming out. The SPY as well. Like, of course, it could dump again. But let's see. Let's see. The SPY is catching a bid here. Q's not so much. Not so much on the Q's. Does anyone think that that's an insane trade? This short, roughly here, targeting the roughly 24,000. Is this the right contract? 456. Yeah, it is. Wait. No, it's not. Oh, this one has an update. Oh, wait. NQ futures. UZ. All right, I want the December contract. Remember, if you haven't already, you might want to roll your contracts and get on the right one. We are now on the NQZ. Technically, you could still trade the September contract if you want. It doesn't expire, but now there is more open interest on the December contract relative to the September. So it's not like it's not like you have to do it right now, but if you haven't done anything yet, maybe it's time to consider that role. Maybe it's time to consider the role. But anyway, I already lost what I was just doing because I switched the contract, and I like to know the pre-market highs and lows because they tend to be for technical traders, like for pure chartists and whatnot. The post-market and pre-market extremes, the high and the low, they tend to be targets, and it makes sense. I remember one time, this was a while ago when I was doing some research on it, over 88% of the time in a given trading day, either the high or the low is taken out in that trading session. So something like, it's not a guarantee. There's no such things as a guarantee in the market. But I did want to let you know that it is good to know the pre/post market, like just the overnight trading session high and low, because it is commonly taken out. So if you can get in for an opportunity and get the trend, it could be a pretty decent level for you to target. It's at least better than having no plan or no idea whatsoever. 5 out of 10 SPY stays above 660. So you're saying a 50-50 shot. I like those odds. Matt, your Apex account was near 160K recently. Did you cash out? No, because if it goes up that high, then I would convert it over. Remember, from an eval, because remember on those you only need 9. So like my account would never just sit at 160 unless it was a performance account. So I think there's a little bit of confusion there. Because remember, the profit target is 9K. And there's no consistency rules on Apex. So as soon as you hit it, whether in one day or not, you could just like convert it that night. All right. Well, 15 minutes of hell has led to now a pretty decent pump, honestly. Yeah, look at this. Okay, starting at 947, the Mag 7 started to show a little bit of life. Also, the S&P 500, not really showing life, but also not really getting hit anymore. And actually, in real time, catching a little bit of a bid. In fact, the SPY might be coming for the All right, at this point, we might as well mark out intraday highs and lows, because why not? Let's watch some of these levels and see how people react to them. The Q's getting quite a bit of range. If you're trading the NQ contract, obviously Godspeed, because that's quite a bit of movement. Quite a bit of movement. Tesla V-shape, Nvidia V-shape. The only thing green on my watch list right now is Robinhood and Apple. Everything else is in the red, but not as red as it was. Not as red. Actually, AMD is now green as well. What's going on with AMD? Oh, AMD. Hang on. I know we have some AMD people. It's knocking on the door of a breakout again. Just to be completely transparent, I don't have a position on AMD, but from a technical level, it is pushing on the upper end, and you could risk this recent swing low. You could risk the bottom trend line. You could risk this extreme, depending on how conservative you are or aren't. Technical levels would be 165, followed by 171. There's also an upside gap fill to 174 and some change. So, AMD, one of the few green ones on my watch list right now. Intraday looking strong. Hood is intraday looking strong. Apple's not doing anything. Tesla's having a decent recovery. Nvidia was dragging some of this market down. Microsoft is getting hit. Meta is getting hit. Tesla's recovering. All right, I don't need this. All right, well, while we're waiting for the opening session to really, I guess, play itself out here, are you guys seeing anything of interest? Anything of what you deem to potentially be good setups? I'm not seeing the most. Obviously, Hood kind of looks interesting. AMD kind of looks interesting. Palantir is not where I need it to be. Avago's not where I need it to be. On Tesla, I'm waiting for the downside gap fill. Meta, I just didn't see that interesting of bets. Microsoft, Nvidia. We have political pressure. CoreWeave, it's on my watch list waiting for that breakout. ESU. I need to change these. All right, so a little bit of a reversal pattern here in the S&P 500. So we popped, we pulled back. It's showing some strength. It's cracking. Remember how I said the pre-market highs are generally targeted? We just took out that. Well, technically, it's the overnight, the extended hours. So we just tagged that in the S&P 500 futures contract. So congrats if you held that bullish position, because things were looking a little sketchy this morning. 5 minute bullish, 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 bullish. So the momentum on the S&P 500 futures contract is bullish. Same thing here on the NASDAQ, bullish. Oh, NASDAQ has a little bit of room. I should probably update all these contracts. NQZ. 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 And then here, let's delete all these because we don't need those popping off for no good reason. I'm just doing the contract roll now because I assume most of you are. So I just want to be showing the right levels. NQZ. All right. All right. So let's redraw these. Obviously, we want to know the overnight breakdown, and we also want to know the overnight breakout. All right, it's pretty much the last 4 hour bar there. All right, so the NASDAQ is definitely has a little bit to be desired still. And for some reason, I lost my pivot ribbon. There we go. All right, so 5 minute was bearish, trying to battle right now. Someone just hit it. The 30 minute, we're seeing some signs of rotation in my humble opinion, but remember, there's a lot more to the story today than anything else. What the fuck is this? I always forget that there's bullshit in this that I don't ever want. Okay. Check out QBTS if you don't mind. I always do calls and puts on the stocks and never lost. Well, I don't. No, that doesn't make sense. You've never lost. It looks very bullish. You got this higher low right here. You're breaking up. It's chasing if you get in now. If you got in on the 11th and the 12th, that is awesome. But more important than that, this idea of you've never lost. If that was true, you'd be a multi-billionaire. Like, I think that's a very, that's a little, just be dangerous with that thought process. First of all, no one is ever 100%. Second of all, very dangerous psychology, because that is, it's extremely egotistical, and it's not respectful of how bad things can go. So it would, if anything, it could promote you like getting into a position you shouldn't be doing. You're a little too cocky, a little too arrogant. Maybe you're a little bit oversizing. And I hope you hit it. I don't want anyone to lose money, but you have to be very careful with that. Very, very, very careful with that. That's a dangerous, dangerous thought process. What do you think about HIMS and IONQ fundamentally? Oh, I don't know about them fundamentally. I don't know. HIMS is doing nothing seemingly, and then IONQ, I haven't. I can say technically, but this is going to be like qubits or Rigetti. I mean, I'm sure this whole the whole quantum computing like world is breaking out right now. So it's sector wide, whether it's QNTM, whether it's Rigetti, whether it's IONQ, this whole sector is ripping right now. But to answer your question directly, I don't have their fundamentals memorized because I'm not fundamentally invested in these. How's Open doing? It's range bound still. Everyone in chat's freaking out like it's doing something special. It's literally range bound. At that dinner that I went to, hang on. Oh, hang on to your horses. Please hold your horses. The guy who is This is a very real story. Arbitrarily, you guys know I have very low thoughts and opinions of the guy who's attempting to pump and dump open. And the reason I have a low opinion has nothing to do with the fact that you like the concept of making money on the stock. You can make money on the stock. This has a lot of range, has a lot of volatility. It's an inside day and it's still up 11%. This is an active trader, swing trader's paradise. Big swings to the upside, big swings to the downside, big swings to the upside. Yes, I've explained this at nauseum. You can make a lot of money if you're on the right side of this trend. That makes it a great trade. It does not make it a good investment. There is one particular character on Twitter especially, who for some reason has caught like the attention of many people, and IWM is going. He has caught the attention of many people, and he's basically conned them into thinking it's a great investment. And I take a big issue with that because I've lived through AMC, I've lived through GME. When you have these equities, these tickers that have a cult-like following, and you pitch to them that it's an investment and they shouldn't worry about their downside protection or their leverage or anything like that, I find it very dangerous because I've seen how bad it can go. If you look at the fundamentals of Open, it's not good. This is not a fundamentally sound company. It's an awesome trade, but those are two distinct things, and a lot of people conflate them because they both play out in the stock market. You invest in the stock market, you trade in the stock market, so people don't appreciate the fact that they are wildly different from each other. I cannot make this more clear. Open is a phenomenal swing trade, something to be actively managed. You ride the trend, you get the meat of the move. When you're up a decent amount, put your stop at break even, take all your risk off the table, and enjoy the ride. That doesn't mean you arbitrarily throw money into it at any point and just hope that you're going to be better off in the future. That's not how this works. That's what a lot of people did with AMC. They blew out. That's what a lot of people did with GameStop. They blew out. That's what a lot of people did with Dogecoin. They blew out. That's what a lot of people did with Shiba. They blew out. There's countless examples of this. It is an active trade. The people who make the most money in these environments are the people who ride the trend, and when the trend breaks down, they move on with their life. It is truly, it is that simple. That's all you have to do. So I'm not against it. I'm just saying if you engage in it, make sure you're managing it properly. So anyway, there's one particular character on social media who has conned a bunch of people into thinking that it is a phenomenal investment. And by pure happenstance, by pure luck, he was sat at a table with me on Monday night. And I shit you not, folks, I wish I wish I was making this up. Like, I deeply wish that this was not reality. I wish I was lying. I wish this was a part of the show and I'm just here for entertainment. When I met this man, the first thing he said, the first way he introduced himself to me, is that he is the roaring kitty of Open. Like, dead serious. Not a note of comedy or levity in the statement. Dead fucking serious. Says that he is the roaring kitty of the newest stock on the market that's going up, Open. And I asked him, I was like, okay, like, well, why do you like this? What's your, I was kind of playing a little dumb of like, okay, like, what do you actually think here? Is it going for my target? Boom, hit it. I told you these levels, they're very popular. That was a tough pullback, though, from almost hitting it all the way up. So if you got it, obviously, congrats to you there. But that was a little bit of a tough trade for sure. So I was like, okay, like, what is it? And if you don't know anything about this, it's in the world of real estate. And like, you would assume if someone's a fundamental investor in it, they would be pitching you some sort of macro outlook on interest rate cuts. And we expect like the real estate market to benefit X amount because mortgages are going to be cheaper. No. His giant thesis was that he thinks he's going to get Drake to buy a share of the stock, and then that's going to promote more marketing. And also they have like a new CEO or something that's from Shopify. I was like, so your fundamental reasoning of like why you think this is going to happen is because you might get a celebrity to buy the share and there's a new guy on the management team. So I was like, okay, interesting in that. And then I asked him where he thinks it's going to go. Once again, please keep in mind that This was not joking. This was not anyone being sarcastic. He said to me he thinks it could be a $500 stock. A $500 fucking dollar stock. This company that's like barely keeping the fucking lights on, not long ago trading a sub $1. It's so evidently a pump and dump, currently trading at 10. He thinks it's going after what? After going up what percent? After going up 1,300%, he thinks it's going to go another 50x from here. It fucking insane. I sat there and I was just dumbfounded, jaw on the floor. Like, holy shit, man. It's just the fact that so many people fall for it. And when I say fall for it, to be clear here, fall for this idea that, hey, if you invest a little bit of money in this, it's going to solve all of your financial problems and this thing is magically going to go up. That's not how it works. I cannot be more clear. It's a great trade. Play to the upside, make a bunch of money as long as it's bullish. And then when it collapses, you could probably make even more money as a bear. It's an active trade. Don't buy into this bullshit of price targets or anything like that. Ride the trend. You don't have to overcomplicate it. In fact, plays like this are incredibly easy to not only spot because it's so evident structurally in how they look. You just ride the trend. As long as we're making higher highs and higher lows, you're in. If it starts to break down and make lower highs and lower lows, take your money and move on. You got the meat of the move. Don't try to bottom tick. Don't try to top tick. Obviously, use reasonable position sizing because things do go bad. But to fucking drink the Kool-Aid and be like, I'm going to throw money in at the top and I'm told that it's going to 50x from here. I've seen it before. I've seen it before as literally the largest streamer covering all the craziness with AMC and GME, having exposure to hundreds of thousands of retail traders who have been through this, not only via chat, but emails, text, letters, folks, I've seen it all. There's nothing new under the sun. And the fact that you have this fucking old dude who should know better and should be more mature trying to tell people it's going to 82 and then privately saying it's going to go higher, and then the reasoning has nothing to do with the business. It has to do with the fact that he thinks Drake's going to buy it. Maybe 500 share if it goes through 1,001 reverse split. Maybe. Isn't Open's revenue declining? Oh, it's a horrible company. That's what I'm saying. Is it fundamentally it's a bust company. But that doesn't mean it can't go up. Remember, in the long term, like gravity, fundamentals win out. That's what we saw with AMC. Is in the long run. So in the short term, there can obviously be a large distortion, and it can last for a while. But in the long run, fundamentals always win out. So that's why you have to, in your mind, separate active trading from investing. And it does cut both ways. Just because something's fundamentally bust, that doesn't mean you just arbitrarily short it, because as we've seen, AMC, GameStop, Workhorse, now Open. If you're just arbitrarily shorting it, you can also get screwed because things can trade at a distorted price for quite a while. So you have to be patient and you have to manage risk in both plays. In both directions, in both plays, that is absolutely paramount. And coming back to whatever someone was saying before, is like, I've never lost. If you approach the market in a I am smarter than everyone and I don't mess up like manner, you are then opening yourself up and you'll be very, very susceptible to like literally just blowing out. Like literally just blowing out your account. Incredibly dangerous. Incredibly, incredibly, incredibly dangerous. What is happening over here? Oh, interesting. Interesting. All right, I'm watching. So right here, we had the 30-minute Orbo, the 30-minute opening range, high and low. We had the breakdown on both the Qs and the SPY. So both broke to the south side, which increases the statistical likelihood of closing below the previous closing value. So right now, there's a 77% chance the SPY closes below 660 and the Qs close below 591.18. Once again, a 78% chance with a little bit of deviation based on the day of the week. But with that, That's something that I find statistically to be strong enough that I would trade on, but not on days like today where you have a giant coin flipping event of how's the market going to react at 2, how's it going to react between 2 and 2:30, and most importantly, how's the market going to react to Jerome Powell's speech later on. So because of all of that, yeah, right now, the fact that we broke to the downside on the 30-minute opening range, the odds of us closing below the previous close are very high. 3 and 4 shot, actually technically a little bit better than 3 and 4 shot. But on days like today, it's just this whole game, it comes back to risk management. I met some cool people at that dinner at the opening ceremony and stuff. And I had a good conversation with one guy who actually manages money and is obviously far better, far more skilled, far more in tune than I am. And we had a good conversation of what separates professionals from retail. And I expressed the opinion that I think really, truly what separates retail traders from professional traders is just risk management. I think it's exclusively that. I don't think it has anything to do with, I suppose, finding the good trades and having these big winners or anything like that. I think even early on in your career, you're going to ideally, it seems like we all have those stories of just sheer luck where you just hit some big winner. It's all about the losers and the sizing and the losers and the control of those, where it seems like retail and professional traders have the exact opposite problem. Retail gets out of their winners way too early and holds on to their losers way too long. While professionals show, I think this truly is the distinguishing factor, is professionals, they get out of their losers right away. It's minimal risk. And then when they have a winner, they just hold it and hold it and hold it. I think that's not maybe the defining thing, but it's definitely up there. Definitely up there. Going long on QQQ, I'm not sure if I like that, brother. I'm not sure if I really like that. I am not sure. Not sure. Just because you're throwing your money on the table before you even know what's going on. If you're sitting here at 240, 245, a little bit of the way into Jerome Powell's speech, and your reasoning is, hey, I still like the risk, I still like the structure, and I like what Jerome Powell's saying, have at it then. But why now? You don't know what the interest rate decision is going to be. You don't know what Powell's going to say. And most importantly, you don't know how the market's going to react to what Powell's going to say, to the summary of economic projections, and also to the rate decision. So because you have just 3 very impactful unknowns, my question is just why are you flipping a coin now? What's the point? The move is going to be this afternoon. So whether you're a day trader, a scalp trader, or even a shorter term swing trader, what's the point of doing the trade now? As a scalp trader, I could see getting in now because your argument might be, no, I'm going to get in and out before any of this in the afternoon happens. Totally understand that. But if you're no, I think I might hold it through the day, might maybe swing it. It's just wait. Also, retail traders bet from their mom's basements. That's a fair point. Some mom's basements are real nice. Some mom's basements are really nice. Who else did I meet?
Order submitted.
Oh, Icarus just traded. What is Icarus doing? Icarus took this breakdown here. Lower highs, lower lows, popped up consolidation, cracked this low, targeting half the range between the extreme and where we are. It actually almost got a fill on that push. It was off. Oh, dude, is it going to be one of those days where it's off by a point? It dipped all the way to 60 and my fill was at 69. So it's a with trend based on the intraday price action. It's a with trend change. It's trying to not trade it at the extreme, and its targets are pretty, I don't know, conservative, if you will. I watch you every day during the AMC GME. That was great, invigorating time. But I appreciate your growth and honesty today. Would you have done anything differently, or what did you learn? What I would have done differently. What would I have done different? This is a great question. And yes, obviously, with hindsight, there's always things that you look at and you're yeah, I think I would have done this, whatever, XYZ. So throughout it, you watched it, so you could either disagree or agree with this. You could tell the people if I'm lying or not. I felt that I did a decent job of telling people it was an active trade, not an investment. I remember making videos and streams where I thought, okay, like I want to be the guy pitching this concept of following the trend. I like that I did that. I think I could have been louder. I think I could have driven that point home even more so than I did. So I thought it was kind of one of those things where I'm like, oh, wait, well, sometimes you self-project, and what's evident in your mind and how you handle something, you assume kind of like the world does that. And I don't know if I necessarily had enough appreciation for how many new people were involved in the play and didn't look at the market through the same lens and framework that I did. So even though I'm happy I said that of like, yo, this is an active trade, manage it properly, set your stop to break even. I think I could have been louder about that. I think I could have driven home that point more because I didn't understand the true composition of who my audience was. That's one thing I would do. Another thing I would do is there were other influencers and creators who, if you live through that era, you know them, where I knew some of the things they were pointing out was wrong. I knew some of the devious things they were doing in the background and not telling anyone about it. And I didn't want to go loud. I didn't want to be vocal with it because I didn't want to rock the boat. At one point, I thought it was very, very important for my own image to not be that guy. I wanted to be the guy who the other creators and whatnot liked. Like I feared the backlash if I spoke out of what like the common accepted statements were. And obviously at this point, without naming names, you guys know who I'm talking about. You know the group of people who I'm talking about, where there were people who were continually peddling bullshit. And I felt that maybe I didn't have enough confidence in who I was as a creator and where I was at that stage in my career that I just didn't want to go against the grain. And I didn't really agree with them. I just like, there were times that I was asked things or I saw things and I just held my tongue. You know, like, I look back on that and I that's actually where I get the most frustrated because it kind of makes me feel like, I don't know, like kind of like I bitched out about it, you know, that type of a thing where I was like, like in the back, I wish as soon as I saw some of the sketchy things going on that I saw publicly, as in just people making crazy statements that weren't backed by fact. And then on top of that, like knowing some of the things that happened, like the backdoor stuff, where I'm like, yo, this is so fucking scammy and people are just actively lying. And the fact that I didn't use my platform to call them out, that frustrates me. That really frustrates me. So I would have changed that. For sure. And honestly, the more I think about it, I'm sure I could come up with even more things that I would theoretically alter or change. You definitely were the most balanced. Everyone was definitely told us to sell everything and put it in the stock. Yeah. Dangerous times. And that's like, and I see a lot of somewhat reciprocal things happening in open right now. And you can still make money. See, that's like the weird balance that I'm trying to like understand. Like you could make a lot of money on AMC. The people who are trend following traders made the most money. Same thing with open. The people who are trend following traders are going to make the most money. And I see like all this conflation of like, oh no, it's an investment. I'm just going to like hold it forever. I find the GME crowd more tolerable compared to AMC. At least GME has actually made the great strides towards a turnaround. The AMC crowd are just full of copium. I think that's right. I think there's fair statements to that. I think, well, obviously we're getting into the point of just opinionated shit now, but I do not, for the life of me, understand how. Hang on. 59.
Order canceled.
What was that at? 59?
Order submitted.
I don't understand how Adam Aaron is not, like, he didn't get in any legal trouble for, like, I think there was a huge amount of evidence of him breaking his fiduciary responsibility. He won't go down because he's too like small in the grand scheme of like U.S. business and capitalism. But if there were a leaderboard of the biggest business fumbles of all time, Adam Aaron and that board would be number one. No doubt in my fucking mind that those guys fumbled one of the biggest business opportunities in modern America. Literally, a shitload of capital just fell on their lap, billions of dollars, and they somehow could not do anything with that. And
Order
like,
filled.
I don't get it. Like, I don't get how you can fumble such a fucking layup that, like, I think you could pick a person who's never had anything to do with entrepreneurship, a business, a publicly traded company, like nothing. I'm talking zero knowledge of business, and I still think that they somehow could have pulled it out better than Adam Aaron. Like, in hindsight, this is now evident that all he cared about was lining his own pockets. Motherfucker paid himself $25 million a year to what? To let the company go down by 99%? Their big innovative thing was to sell popcorn outside of theaters? Like, fuck, man. You could have come up with a better business plan by literally just going to ChatGPT or asking your fucking local hobo on the street corner. Like, I don't understand it. Like, in my opinion, it was the biggest business fumble of all time. It's up there. Maybe there's other crazy stories, but holy shit. And to your point, GameStop, yeah, they did something. They kind of saved the company. It was going to go bankrupt. They turned it around. It's now basically going to become like a modern age Berkshire Hathaway, just like an investment vehicle. And did they execute it perfectly? No, but now the company has a shot. It actually has a shot. It was going to die, and now maybe it's going to become something. On the flip side, AMC is still going to fucking die. Like, I've said this for a while, and I don't think it's going to happen in the immediate future, but eventually the bondholders are going to take control of AMC. Equity holders are going to get screwed. It's going to go the way of Bed Bath & Beyond. It's going to get declared bankruptcy. It's going to go into restructuring. All the equity holders are going to get nothing. The bondholders will get a little bit of something, and then it's going to be spun off into probably the same ticker, but it's going to be legally an entirely different entity, and that's how it's going to go. Ape, what a joke. Remember when people argued with me that it wasn't dilution? I remember Meet Kevin and I were the first people, the day that came out, the filing that they were going to do it right away, because we have, like, literally, it's not even like like an expert understanding of business. It's just a rudimentary understanding of business could understand that was backdoor dilution. And we're like, hey, this is crazy. They're diluting us again. And they said they wouldn't dilute us. And they're like, no, man, it's not dilution. It's not, he would never, ever do that to us. And now look at it. It's just, at a certain point with the AMC community, you get so tired of being right, and then everyone's still yelling at you that you don't know what you're talking about, as they're just like losing all their money. Like, it's just crazy. When they diluted those shares after gaining all that capital sucked, he definitely fumbled great innovation opportunity. Yeah. The best thing they could have done was get the fuck out of the way, redo the entire board, get a new group of members and leaders, new innovative people, fresh, bright entrepreneurs, and bring it on to the next thing. Instead, they just used it for their own individual financial gain. And then what it ended with, well, it didn't even end, unfortunately, but then he just got catfished. He was literally attempting to cheat on his wife, and then it became an FBI issue when he realized he was being catfished. Like, what the fuck, dude? Like, how dumb is that guy? As like a ugly, crusty ass, like 70, 80-year-old thought a 30-year-old ballerina was talking to him just to then get catfished. Dude, he literally thought he was talking to like a 17-year-old. And it ended up being a 30, 35-year-old lady who was catfishing him. Whoa. What the fuck? Hang on. Error submitted. I'm confused. I just saw an error. But there's no orders, right? Here, let me just cancel all orders. I don't know what's going on. That was weird. We'll have to figure that one out later. I'm having some technical issues with this roll. Where's the 5,000 tick? I don't know, dude. Your guess is as good as mine. Mom? What's up, Jay Keith? All right. IWM still having that struggle at 240. It's been struggling at 240 for quite a while, but if this can get going, 242, 245 would be my upper end target on old IWM there. Russell. The reason I'm more specifically focused on this is just, I guess, kind of the old thought, the old wisdom on Wall Street is when capital becomes cheaper, as in Fed rate cuts, when capital becomes cheaper, there should be an outsized positive impact on small cap companies because they're the ones in need of capital the most. And now that capital is cheaper, they should be able to get it with a bit more ease. So that's why I know a lot of the times I don't talk about the Russell, but just because of where we are in the monetary policy cycle, I'm really wondering if this can get some legs and pop to a new all-time high at 245. So that's why I'm watching the Russell. Bitcoin was looking good, taking a bit of a hit. Hood giving back some of its gains. Apple's looking good. AMD almost broke out. Palantir almost broke out. Avago almost broke out. Tesla's doing nothing. Meta almost broke out. Upside gap fill. Microsoft almost broke out. Nvidia is actually seemingly breaking down. We now have a succession of lower highs and lower lows in more of the short term. I should probably put some risk in. Oh crap. I was hearing here, I'll show it to you what I was getting alerts. No, that's not the alerts. Here were the alerts. How do you update the I was getting alerts from Bookmap here. How do you update? So do I NQ Z? Is it time to go to the Z contract? Advanced options. No, I want from time. Oh, it's technically 18 o'clock, right? Because that would be the market open. No. Dude, seriously? 18 o'clock. No. Why is this not working? Subscribe. All right. I'm trying to roll these contracts as well, so I don't need that anymore. And let's see if we could get this. So I was trying to get the data from 6 p.m., which is the futures market open. All right. We might as well do the ES contract while we are here. ES. From time 1-8. Okay. Subscribe. All right. I think this is going to take a second to load, but something was popping off on my other computer, but now it's loading. It was probably this breakdown is 60. Interesting. Nothing's happening across the New York Stock Exchange. I actually thought that'd be going up because of the Russell. Tesla just gave some back. Okay. At this point, I should probably just put this stop in at break even, right? My options are either put it at 73. I'm short right now. We're at 62. Buy stop.
Order submitted.
I'm going to put it at break even. One tick in my favor. I'm short at 62. The stop is at 61.75. And hey, why not? It's a free ride. So I've locked in 72. So no matter what, I'm making $72 because now I have a free lottery ticket, which if you've watched my show at all, that is my favorite way to engage in the market is lottery ticket plays, as in my stops at break even. Worst case scenario is I end up where I started off. Or best case is I make a lot, but the fact that my worst case is not that bad means I could just move on with my life. So we'll see if I caught a fish. I think all of life, not that you guys necessarily asked for my philosophy on life, but I think all of life can be described by two things, fishing and the sorcerer's stone. But in reality, if you think about it, fishing in an effect is also the sorcerer's stone. So if you guys are familiar with J.K. Rowling's parable, Harry Potter 1 and the Sorcerer's Stone, I actually think all of life can be described by that, which I think an offshoot of that. And maybe the Sorcerer's Stone was created by fishing. Maybe fishing was created by the Sorcerer's Stone. But they're pretty much all, that's it. That describes everything you need to know in this world. It truly, truly does. And I believe that right here, you're fishing. Like the Sorcerer's Stone, you can't want it too bad. You can't want to use it. Sometimes you just have to sit there and relax and see how things play out and recognize some things are out of your hand. And maybe, just maybe, if you look into that mirror, you're going to find the elixir of life. I'm confused. Well, maybe you should go watch the Sorcerer's Stone movie or go fishing and you could figure it out. That's probably what you need to do. Probably the only fair way to handle this one. All right. SPY is chilling at the low from yesterday. The Qs are breaking down. The Russell's holding, going flat. Tesla's getting clipped. Which one's down the most? Avago's down quite a bit. That's not so good. And NVIDIA is also down quite a bit. Also not so good. How's Open doing? I'm now even getting alerts. Open actually tried to get this technical breakout. It got one technical breakout. So watch 1070. Still, it's inside this bar. This is still a consolidation pattern. 1, 2, 3, 4 days in a row. You're looking for that break above 1070, or really you're looking for the break below 742. But still this inside formation. Getting a breakdown alert on ES. We just took out some important level. Something of importance. We did on NQ as well. The Qs are going down, team. They're very much going down. And the question is, where should I move my stop to ensure that I make a little bit of money? Or do I just let it breathe? You can't. It's like when you're fishing for a largemouth bass. You can't force it. You don't know when the fish is going to bite. I would say, I know this is kind of crazy, but I don't think anyone could actually disagree with this statement. I think a largemouth bass is kind of the sorcerer's stone of the marine life world, you know? You know, if we really broke it down, if we really got into it, is there a difference? I can't think of one. You think I'm going to get clipped for break even, or do you think I should just take this money? I kind of don't care. It's just break even. If it clips me, it clips me. Whatever. Fuck it. If that's the worst thing that happens to me today, I'm doing A-okay. A little bit of a hit here in the Russell. NVIDIA catching a bit of a bid. Bitcoin at 115.6. Hood's coming down. Apple is the strong one. If you're looking for strength, when nothing else has strength, it is Apple. And everything else is seemingly down between 1% and 3%. Tuna are aggressive. Tuna are way bigger than you think they would be. Way bigger than you think they would be. Also, I don't think the world understands and really realizes how aggressive a hippopotamus is. Apparently, they're like hyper territorial, and they kill a decent chunk of humans per like year. Hippopotamus, they are very brutal creatures. And also a fun fact about hippopotamus. Oh shoot, what's his name? Cartel, Colombia, biggest cartel lord of all time. He was taken out by the DEA, I want to say in the 80s in Colombia. He was shot on the rooftop. What's his name? Come on, guys, help me out. Biggest cartel guy of all time, Pablo Escobar, right? Like, to the point that they think inflation adjusted, he was like at one point in time the richest man in the entire world. This is a guy who his monthly bill on rubber bands, because he was in a cash heavy business, he had to buy $5,000 worth of rubber bands every month just for his cash, just for all the cash inflow. Do you know how many fucking rubber bands that is? Do you guys appreciate how much cash this guy was dealing with when he had to spend $5,000 on fucking rubber bands? Well, anyway, back to my hippopotamus story. Because when you're that rich, you start to do rich people things. And as a rich person, he wanted his own zoo, and he made his own zoo. And the zoo happened to have a hippopotamus in it. And when everything went crazy in his life and whatever federal agencies were coming after him, this, that, the other thing, the zoo broke down. And to this day, Colombia has a thriving hippopotamus like community and I guess ecosystem because of exclusively Pablo Escobar and his zoo and the escaped hippopotami. I actually don't know how to pluralize hippopotamus, and this whole conversation I've been, I don't know, gingerly avoiding the word, but what is the plural of hippopotamus? Hippopotami? Hippopotamus? Moosin? Hippopotamusin. Moosin. What the fuck is the plural? I almost got tapped out there, by the way. Hippopotamus. Now we have to. What is the plural for hippopotamus? The plural of hippopotamus can either be hippopotamuses or hippopotami. While hippopotamuses is the standard English plural for hippopotami, is also widely accepted, often used by scientists or those who refer to maintain the word's Greek-derived structure. So you could say both, hippopotami or hippopotamuses. If you want to be scientific, you say hippopotami. But if you want to be a normal person, you say hippopotamuses. Group. What's a group of hippopotamuses called? Whoa, a bloat. A group of hippos is mostly called a boat, can also be referred to as a pod, a herd, or a crash. A bloat of hippos, of hippopotami. A bloat, or a crash, or a pod, or a herd, but a bloat. Interesting. And you guys thought you weren't going to learn anything on today's show. Well, I bet you're embarrassed. A bloat. Folks, I'm moving my risk. No matter what, $40. Your boy's paying for lunch. Your boy's paying for lunch. A group of hippos is called a liberal woman. That's so aggressive. A liberal woman. Come on, guys. Liberal women are women too. What's a group of crows? That's called a murder. I at one point I tried to memorize a lot of these group names for animals. So a group of crows is a murder. 12 or more cows is called a flink. There's a fluffle, I believe, of bunnies. A group of bunnies is a fluffle. There's some interesting ones out there. There's definitely some interesting ones out there. A bloat, though. I don't know if I knew that one. Yeah, ravens are an unkindness. There's some good ones. There are some good ones. A parliament of owls? I didn't know parliament of owls. That's a good one. Hey, Matt, you go with the Eagles. What do you think of the tush push? I'm all for it. It's gotten my team a Super Bowl. It's gotten my team many touchdowns. It's helped pad the stats of my quarterback, Jalen Hurts. I could understand how if you're not an Eagles supporter, you're going to be like, this is fucking stupid. But as an Eagles supporter, of course, like, dude, if it helps my team win, it's going to win. If I did not support the Eagles, I'd say this is the dumbest play ever. Look at all of the rules that are broken every single time they do it. Some guy just pointed out how the center is like perpetually offsides when we do the play. If I did not support the Eagles, I would be there with you. I would say this sucks. But it turns out I do like the Eagles. So my response to anyone who doesn't like it is fucking cry harder. You know it's coming. Prepare for it. It's not on me. Figure it out. Sorry that we have a running back and a quarterback that can lift a fucking ship because they're two of the strongest humans that have ever lived. I don't know. Do something about it. Go draft some burly defensive lineman or something to stop them. But other than that, sucks to suck. Sucks to suck. We're finding a bit of support here at the low value from yesterday on the SPY. This is a common reaction zone. Basically, we were dancing around this morning. We puked all the way down to it. We're finding a bit of support. Happens to also not just be the low from yesterday, but it's also the key technical and psychological level of 6,600. Not surprised at all that we're reacting to it. If we bounce, look at yesterday's close value. If we break down, look at 10 points lower, 6,590. Those are like the next two levels I'd be paying attention to. With respect to the Mag 7, it keeps getting hit as we're continually seeing that rotation seemingly into small cap. SPY's catching a bit of a bid off this key level. Not the most surprising thing that people are attempting to react to it. Obviously, Russell's looking good. Tech is looking weak. I put my stop there just at the recent high. I could take this money, but what if it breaks down? You know, sometimes when you're fishing for the sorcerer's stone, you just gotta wait it out. SPY gonna rip? Maybe. Remember, the game of prediction is not how you make money. In this game, it's a game of reaction. React to the setups. Identify low risk, high reward. Bet accordingly and play it time and time again. If you're sitting there saying, oh, I think it's about to go up, I think it's about to go down, congrats, you're thinking about something. And that's, I guess, a lot more than most people these days. But in reality, that's not how you make money. Prediction does have its place in the market. Specifically, I think that's a very worthwhile thing in the game of investing. Predicting, will trends grow? Will they get bigger? Will they revert? For example, you could be predicting, will EVs be more popular a decade from now than they are at this exact moment? That's a reasonable prediction. And if you think so, and maybe you collect some data on it, okay, great. Put your money where your mouth is. But in terms of active trading, especially because remember, the shorter your time frame, there's more noise, as in randomness. So because of that, there's really no place for prediction in active trading. There just isn't. Matt, you're never going to find the Sorcerer's Stone. Dumbledore hit it. Yeah, that bitch. I think the problem with the tush push is the Eagles could hypothetically hard count to oblivion to draw the other teams off sides, which is what we saw in the playoffs. Yeah, then the other team shouldn't go in off sides. That's on them. Dude, you're not going to get me, I can understand if I hated the Eagles, if I was a Cowgirls fan or something, I'd be like, this is the dumbest thing ever. I agree with that. But at the end of the day, I'm an Eagles fan. I'm going to say, hey, fucking sucks to not be an Eagles fan. because that's really the defensive's best short to stop it. They can give up a centimeter and they have to anticipate the snap more than any other play. Well, they should figure out how to stop the team before it gets to a 3rd and 1 or a 4th and 1 situation. I don't know. Maybe they need to focus on having a better defense early on. All I can say is it just sucks to not be a Philly fan. Arguably one of the most like just hardcore fan bases out there. Like, I don't know. The Philly fan base is interesting to say the least. It is very, very interesting. Bearish, 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 bearish. All right. I guess I can move my stop to this high, I suppose. We did just make a fresh low. If we bounce, that's 25 points. That's $500. We got rejected at 49. Oh, there's a lot of buy-side liquidity here. A lot of pending passive buy orders. This will be interesting. Does it break or it bounce? There's 289 contracts attempting to be bought at 24,420 if you are on the December contract. That is quite a bit of buy-side support. The question is there enough aggressive selling that's going to crash all the way through it? All the way through it. All right. What's everyone's best guess? Do you think we're going to bounce or bust right here? Like I said, there's 287 contracts attempted to be bought. Passive sitting buy orders right here. You think they're going to smash them, or you think it's actually going to bounce? You think it's going to smash them? Here we go. Here we go, folks. We're about to find out. Oops, let me zoom in so we can really watch the show here. So we can really watch the show. Why can't I drag it here? I want to drag it so you guys can see it a bit better. Yeah, that's a better view. Right here, this big buy side, 291 contracts, creeping up to 300 contracts, which is huge. You see all these other numbers, 10, 12, 20, 11, 24, 15, 8. So when you see a chunk of 300 contracts, yeah, it should definitely catch your attention a little bit. Oh, they're getting filled. They started to get filled. About 5 of them got filled. 20 of them got filled. We went down from 300 to 280. Is this player going to keep their order? Are they going to pull it? Are they going to get filled? They partially got filled. Ooh, taken out. Taken out. Was that a stop? They probably got... yeah, they got dumped on. They got dumped on, brother. They got dumped on. Oh, that's a tough break there, Tonto. That is a tough break indeed. Indubitably. Wow, they're getting slaughtered today. The Russell's picking up. Nice. Russell's up 1%. You're seeing a real rotation. A real rotation into small cap right now. Golly gee willikers, you know? The Qs are now coming up to their low from 2 days ago. So we already took out the low from yesterday. Not so good. We're now coming up to the low from 2 trading sessions ago at 88.29. The target here is because it could not hold 90. Of course, it might quickly revert, but in the case it doesn't, the next big gamma level is actually 585 if you're playing the Qs. I guess I should keep managing this position. What time is it? So I'm kind of watching this 588 snap. Dude, the Russell is picking up. Oh, what do I want to do with the Russell? I have IWM calls, but they are for Friday, so theta is kind of destroying me right now. Where am I at with my IWM play? Where am I at? I'm still down. I'm down by 6% net. I'm up 42% today. I'm actually back into the red on Palantir. And I'm down on Avago, and I'm down on Bitcoin as well. Fuck, I just got back to the green on Bitcoin too. I need Bitcoin and the Russell to rip. I need it all to rip, actually. Is it coming for me? Or is this just going to be another rotation lower? Oh, do I just want to take this money? I did take a little bit of a loss, a 2-unit loss. So all these accounts lost about $1,000 yesterday. 2 units, 500, 500. So I turned it off after that. I could make a unit and some change back by closing it out right now. But this did take out giant buy side support at 4420. They might be trying to flush it to 400 flat, because 400 flat is roughly, and hear me out, it's roughly in alignment with the low from 2 trading sessions ago. Monday's low at 588.29. So from a technical perspective, I think there's going to be quite a bit of interest. We have the low from 2 days ago that should theoretically align roughly, give or take a little bit, with 24,400, which that's another 25 points. That's another $500. If I can hit this here, I'll make back that entire loss from yesterday. What to do? You know what I need? I need to employ some ICT trading strategies, because he, in fact, created the algorithms that run the market. If you're new to this show, I need you to understand that I'm being facetious, and ICT tactics are nothing but guaranteed to lose you money, and he's probably one of the dumbest fucking people in the world of retail trading. So if you're new, please understand that I am joking. Please understand that I am, in fact, joking. Well, SPY might be taking a little bit of a dip here. We might be taking a little bit of a dip. A little bit of a dip. A little bit of a dip. Nope. Web trader. Come on. Faster. Faster. Whoa. Puts for today. What did I get my average fill? 23. All right, I'm seeing if I could get a quick scalp on this breakdown, trying to lock in 600, because I think that's all I really need. Come on. I was trying to play if this flushes even to 56, I should be good. I'm in at 23, and I was trying to get out at 23.60. And I still have this, which is looking somewhat decent. I just keep sliding my stop down. I'm up almost $1,000 per account. Like I said, it feels like 400 flat is going to be a level of interest. Large players aren't really doing anything. We just got an arbitrary bounce off of like 410. But you can already see here, this red patch on the bottom of the screen, this is 4,400 flat. Actually, not as big as the 4,420 we saw before, but that's also as of now. So let's just wait. But this giant, I guess, heat map signal, There's a lot of sitting buy orders at 24,400 if you're trading the December contract, which honestly I think is kind of a nice target for me. What time is it? It's 11. It's 10:52. 10:52. 10:52. Well, that sucks that didn't get filled. We really snapped that. Where's the 30-minute on this bad mamma jamma? Yeah, 400. You have this giant wick from Monday. You have this peak on Friday. It's a technical level. It's a psychological level. I'm kind of looking at that 400 zone as important, especially just for the morning session. Obviously, you could throw that out later this afternoon. But for right now, I bet there's a lot of people in their mind that they're like, okay, if we snap 20 and 25, 400 is going to be the next level, especially because of how much it aligns with the Qs here almost hitting that low, almost, which we'll see. A little bit of dancing around. S&P 500 is still holding on to 6,600. I thought this was enough. I thought finally consolidation. I really thought this bar right here was going to be that breakdown bar, which is why I attempted to do this little scalp. I'm just underwater on it ever so slightly right now, but let's wait and see how this one plays out. Obviously, my risk will be this recent high. Nothing too extreme. Small position relative to that account. Nothing too crazy. Nothing too crazy. I just thought that this was enough. I didn't think that it would 1, 2, 3, 4, 5, 6 bottoms. You know, after 3 and 4, you're like, wow, 5 is crazy. But 6 attempts to snap and buyers just keep stepping in. I did not anticipate that. Actually, speaking of anticipating, Mag Spy is getting a little bit of a pop here. Is it about to finally knock me out? Here's what's going to happen is it's going to knock me out and then it's going to go all the way down to my target. Obviously, that's how this one has to play out. It's going to just barely wick me out and then it's coming all the way down to 400. It's pretty much written in like that's how trading works is, of course, before any good move, it has to knock you out and then it's going to do the actual move. Then it's going to do the actual move. So this is the perfect setup. Knock me out, hit my stop, and then vomit. Easy peasies. Easy peasies. It's foretold. It's written in the stars. It's written in the stars. Yep. It's going to fill me right here.
Order filled.
Boom. Hit that. And now it can dump. Fuck. Anyway, whatever. 580 per account. I can't complain about it. That's about 10K. A little bit more. I'm trading on 22 accounts. So that's about 11K locked in right there. I fucking told you guys. This is how trading has to work. If the market can screw you over, literally to the tick, folks. To the tick. Literally. You know, at a certain point, you just accept it. Sometimes you just accept the fact that the market is a cruel, cruel mistress. A cruel, cruel mistress. You call it out. You know what's going to happen. And you see your dreams just get dashed away. Dashed away. Already 16 points. It'd be another $300 in my favor. These would be reading 900 right now. It happens, man. Trading can be like that sometimes. Sometimes it can be a wee bit brutal. But hey, at least green is green. At least green is green. He had to touch the red candle, you know? It's coming back to whoever brought that up earlier. That was a very astute observation. Everything's like the Sorcerer's Stone. I wanted it too much, and thus I couldn't have it. Whoever brought that up, that's a very, very informed take of what is going on. And like Voldemort, I just wanted it. I wanted it too bad. I wanted it too freaking bad. And this is what I get. This is 100%. I should have known better. Anyway, the Mag 7, it's flat after getting hit. S&P 500 try to get popping right there, but looks like some people use that little mini pop to actually lock in their profits. But we were just, the SPY is hugging that low from, dude, it's gonna fucking puke again. This son of a bitch. It's gonna do it. The fucking wick. Ah, pain. Nothing but pain. For anyone who thinks, man, like, my life is going too well. My stress levels are too low. I have too much money, and I just have generally too good of an outlook on the world around me. I highly recommend getting into the world of trading. So if you identify as a person who is too cheerful, too happy, you have too much money in your account, your stress levels are way too low, I highly recommend you get into trading, because there is no other thing that I know of that I could possibly prescribe to all of you to get rid of your money, to elevate your stress levels, and to add somewhat of a gloomy outlook to your opinion on, like, just life and this world. There's just nothing more evident I could possibly do. So if you identify as a person who just generically life is going too well, I would say start trading. The fastest thing I know. Fastest thing I know that could just fuck your life up and make you a pissed off person is just trade. Especially active trading, I would say, is where it's really at. If you haven't already, if you want, today is a great day to pass the Apex accounts. 80% off. Do the half-half strategy, the 50-50 strategy at just before 2 p.m. Use that code Goonie, 80% off. I just want to let you know, because you still have time. You have literally 3 hours to figure it out. I have a whole video breaking down how to do it. But the skinny on the situation is you buy one account, you set up the ATM, the profit and the risk before the trade's executed, set up the ATM. Go long max contracts on one with your profit target, go short max contracts on the other, and the odds are that one of them should be passing as soon as the market reacts at 2 p.m. So I just want to let you know, and you have some time to get that figured out. And also shout out to Spot Gamma, obviously right here as we're tracking this, how we knew to remain bearish, how we're seeing a little bit of optimism now in the SPY. It's all because of Spot Gamma. So 80% off. It's all in the description of the video. Apex, Spot Gamma. Just follow those links. But here is the skinny. The Russell is still looking good. Folks, we're going to be back at 145, 150. So the Fed interest rate decision comes out at 2 p.m. Eastern. Jerome Powell speaks at 2:30. We will be streaming right before that. So like 145-ish, we'll be streaming once again. So I will see you guys in a little bit. Go get your lunch. Stay calm. Don't do anything too silly. Don't do anything you're going to regret later on today. And I will see you back in a couple of hours. So for right now, that's what I have for you. Let's go take a little bit of a break, and I'll see you in a little bit. Please don't do anything too silly. I appreciate all the good vibes. I'll see you in a little bit. Thank you. Peace.